أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome to chapter 13. This is the last of the two chapters and it is about auditing the inventory management process, and we have ample time inshallah to cover it. The three things we're going to discuss today are the objective of the inventory process, types of inventory, and tasks and documents generated in the process. So we're all going to be, all our discussion is going to be on the client side. Okay. Now, the client handles the inventory from purchasing the inventory to the selling of the inventory in this process, and this involves the purchase of the raw material, the manufacturing of the goods, and then selling of the goods and generating revenue. Now, there are different types of businesses and not everybody manufactures goods, right? So we have three different types of inventory for businesses that manufacture goods. They are raw material, work in progress, and finished goods. And you have discussed, you have learned the details of how to calculate and do the accounting of these three different types of inventories in the managerial as well as cost accounting classes. Does that ring a bell? You remember that from that class? Does it ring a bell with you? Yeah. And then the other type of business is where you have finished goods only, where they buy finished goods and they sell finished goods. So that is the merchandising business. Okay. Our focus here is going to be on the manufacturing business, because if we deal with them, we would have dealt with all three different types of inventories here, right? And it is more complicated to audit a manufacturing facility, so we are going to focus on that, inshallah. The first task is inventory management, and in there we have authorization of production activity. Now, the client has to authorize the production activity before they go into production. So they need to know how much they're going to produce. And this is based on how many they can sell and how many they already have and how many they want to have left at the end of the period, right? Remember something like this? Remember calculating this in the managerial accounting class? Similarly, they have to decide on the maintenance of inventory levels. So how much inventory they need to have. So for example, let's say the client has 2 boxes, right? Can sell 7 boxes and wants to have left at the end 3 boxes. How many should they produce? Let me see if you can do this simple math. How many can they produce? Eight? That is correct. How do you calculate that? Has 2 plus need 5 to meet sales, right? So that would be 7, right? But they want to have 3 left, so they want to buy 5 plus the 3, which is 8. Okay, very good. 8 is the right answer. So they need to do that. And then issuance of purchase requisition. This is, by the way, this calculation, you don't necessarily have to do this in the audit side in this course, but the client does this. So to check the accuracy, you need to know how they do it. And this will all come together when you go to audit, inshallah. The last task in this is the issuance of purchase requisitions. And purchase requisitions are requests for making purchases, right? The purchase of the raw material is done by which business process? Let me see if you can answer that. The purchase of the raw material is done by which business process? The purchasing cycle. Very good, right? So the purchase requisition is a request which is an internal document, right? It's internal documents. Whoever needs the item requests it to the purchasing cycle, and the purchasing cycle sends purchase order to the supplier. So the documents that are generated internally for the first step, inventory management, number 1 is the production schedule, number 2 is the inventory status report, and number 3, the inventory master file. These are 3 different documents generated in this process. So let's take a look at an example of each. The first one is the production schedule. As you see this as an example of a production schedule. Remember, these are internally generated documents, and from client to client, their format and the details in the report will vary. Okay, it's not like an income statement that has a standard format and everybody must follow. This is an internally generated document for internal use. So it is going to vary from client to client, and the details, the format and the details are going to vary. But this shows generally, as you see, the product, which is a tote bag, and the variation, which are the colors, and then how many they're going to produce during the first, second, third, fourth week of December, and then same for January, how many they're going to produce, and then the total is shown here, and the total of each week is shown here, etc., etc. So the production schedule shows how much they're going to produce. Are you following? This is not something that is standard from client to client, but they have similar details in them. Clear? Then we have the second document, which is the inventory status report. The inventory status report, again, this is an example. As you see, there are items and how many they have on hand and how many they need to order, etc., etc. The name of the supplier from whom they're going to order. So again, this information, the data contained in the inventory status report is about inventory, the status of the inventory, how many they have, how many they need to order, how many they have received, etc., etc. Just as an example, again, this varies from client to client, but this gives you a general idea of what we mean by an inventory status report. All right? And the third is the inventory master file. Every single inventory item has a master file which shows specific details about that particular inventory item. And again, this is an example. So let's try to understand some of this data here. The item is a board, right? So they manufacture goods and they need boards, right? Cardboard or piece boards or whatever board this is. There's an item number, right? Item type, etc., etc. All these details and unit price, lead time. So they need this 2 days before they go into production. the annual demand for this item is 5,000, so they need 5,000 pieces annually. It costs $1 to hold it, to store it, and it could be for monthly storage, or we don't know exactly the details by looking at this. But if you are auditing this client, they will explain to you much more. Safety stock is 25, reordering point is 39. So when they reach 39 pieces, they order again, etc. And then here is something that if you have taken AIS with me, you should be able to remember EOQ. What does EOQ mean? Let me see who remembers what EOQ means. Sharat says item number is for product type or this particular item of boards. So every single item has an item number. So remember we did block coding and we did group coding and so forth. So every single, if the board is of different size, then every single size has a particular number. If it has got different colors, and every single size, every single color has a particular number. So just from that identification number, you would know, if you work for the client, an employee of the client, you know the size, the color, the details. Are you following? If there is wood and plastic, you would also know that from the item number, right? So it is that detail. Remember the group coding and the block coding that they do for data. You studied this in AIS, remember? Does it ring a bell? Yeah. So what does EOQ mean? Anyone? Anyone? I think all of you have taken AIS with me. Is there anyone who has not taken AIS with me in this class right now? What is EOQ? Economic order quantity. Ali, outstanding. What does economic order quantity mean? Buying in bulk, right? They buy in bulk. So from this, we know that this product does not expire very quickly and they can have a large storage of this item. Okay. So again, not necessarily important for you to understand every single detail here. The idea that you have to understand here is the idea of an inventory master file. What is the inventory master file? It has detail about every single inventory item. Okay. Clear? Is that clear? Is that idea clear? So we have three different documents: the production schedule, the inventory status report, and the inventory master file. Okay. So we go to the next task, that is raw material storage. Here we have receiving of raw materials, which is done by the inventory warehouse. Now understand, the purchasing process orders the raw material. The purchasing process is the same as the expenditure cycle that you studied in AIS. They're responsible for ordering the items, and when the goods come, they are received by the inventory warehouse. The second task is custody of raw materials, to actually have the raw material in storage and maintaining them and not letting them damage or get stolen, etc. So this is the custody of raw materials, actually having the physical possession, physical custody of the raw materials. And then the third task is issuance of raw material for manufacturing. So the raw material is issued by the warehouse to the factory. The factory requests the raw material from the inventory warehouse, and then it is issued, it is sent to the factory from the raw material warehouse. And the documents that are generated are, number one, the receiving report. The receiving report is between the supplier or the shipping company who's bringing the items and the client's inventory warehouse. And an example of it looks like this. As you see, it has the vendor's name, right? Manny's Meat, and it has the purchase order number, purchase order date. Remember, purchase order is the first document in this process, and again, this is done in the purchasing process. So purchase order, then the receiving report. The receiving report is handled by the inventory warehouse clerk, and you see the details of what was received, right? So this is an example of the inventory that was received, and this is handled by the inventory warehouse employees, and then the supplier delivers the items. Clear? The next document that is generated is the materials requisition. This is in between the factory and the inventory warehouse. So the material is requested by the factory before production, and it is sent to the inventory warehouse, and the inventory warehouse sends them the items. So you will see the materials requisition is a document that is used in both processes, the raw material storage as well as the manufacturing. And this is an example of the materials requisition. So you see the details, materials acquisition number, job number, etc., date requested, date needed, and the items they need. It's requested by this person and authorized by this person. So all of these details are going to be in the materials requisition. And again, I will emphasize this is an internally generated document. So this will greatly vary between, from client to client. So this is not standard. You'll see different formats, but in the same client, all materials requisition would be the same, and they would have serial numbers and so forth. So when you're auditing, all these details you will get used to when you go for auditing a particular client. Okay, you'll get used to the format of the documents. Are you following? This is a materials requisition form. The third task is manufacturing, which is production of the goods. And again, before the production of the goods start, the document is the materials requisition document, which we just saw. It is sent from the production of the goods to the inventory warehouse. So you will see this in both places. It's generated here, and it is sent to the previous process, which is the raw material storage. So we looked at the materials requisition form just a minute ago. The other document that is generated is the production data. So during the production process, the client keeps up with the production data. And again, this is an example, the product 1, product 2, and labor, material, energy, etc. So this is again how they keep track of the different costs, different types of costs during the production of different products, quantity, price, value, etc. This again is internal, and it will greatly vary. Okay, are you following? Are you keeping up with me? Okay. The next task, once the products are finished, is the finished goods storage. So the product is finished and it is sent to the finished goods warehouse. So the finished goods warehouse receives the finished goods from the factory. Okay, that is the task. Then the custody of the finished goods. So to maintain the finished goods so that they don't get damaged or stolen. And then the issuance of goods for shipping. Now, the issuance of goods for shipping is done by which business process? Let me see if you remember. Who issues the goods when they are shipped to the customers of the client? Which business process? And just as a hint, the document that is generated is the shipping order, right? Anyone? Which business process issues the goods for shipping? Revenue cycle or revenue process, right? Very good. So shipping order. So this is, as you see, the production process is connected to the purchasing process at the front end, and in the back end or at the end of the process, it is connected to the revenue process. So it begins with the raw materials, which is purchased by the purchasing process, and it ends with selling the finished goods, which ends with the revenue process. So you can understand when you're auditing this production cycle, production process, or inventory process, you would be dealing with both the purchasing process documents, some of them, and revenue process documents. Okay, so the shipping order looks like something like this, and it shows how many items are shipped, and it shows, you know, what did the sales order include, etc., etc. So you can zoom in and see the details. The details are not, you don't necessarily have to understand every single line, but it shows what the customer ordered and what they're shipping, etc., etc. Okay, this is after the finished goods are ready for sale. The next step is the cost accounting. And this cost accounting is actually not the next step, but it is done throughout the production process, and it includes maintenance of manufacturing and inventory costs. And this is done on a cost accumulation and variance report. So let's take a look at what that looks like. Let's zoom in a little bit, and as you see here, we have the variable overheads, the inventory, factory wages, power and light, indirect material, and then we have fixed overhead, supervisor salary, depreciation, etc., etc. So this is again a breakdown of the different costs, and it shows you side by side the variance, right? If the budget is better than the actual, right? If the budget was less than the actual, then it would be favorable. If the budget was more, if the actual was more, right? I said it backwards. If the actual is less, right, then it is unfavorable. So you see 31,000 here and 32,000 here. So it's unfavorable. They spent more money than they thought. But if they spend less money than they thought, so here you see this $264 less the actual. That means it is favorable. That means they were able to do it with less cost. So again, this is the variance report. You studied this in details in cost accounting. When you come to audit, you will be faced with these documents. As you see, all the things are coming together that you studied in your managerial and financial and intermediate and cost and AIS, all of those classes. Everything is coming together because you are almost accountants now. You're almost ready to graduate. You'll be accountants in just a few days, or if you're not graduating this semester, it's in a few months, inshallah. So all of this knowledge that you studied in different courses are coming together, and this course is at the end. This is the reason why this is at the end, so that you can put these things together, inshallah. Are you following? So far so good? Okay. And then we have the last activity, which is the general ledger, which is going to accumulate and classify and summarize all the details. So the cost of goods sold and the cost of goods manufactured and the sales and the gross profit, all of that is calculated at the end. The general ledger you have seen many times, income statement, balance sheet, no need for me to show you an example of that. But this is at the end. So all the data is gathered and accumulated, and then those financial statements are prepared. And again, you see how all of this is coming together in this class. So when the client does all of this, you have to have a very good idea of the documents they use, the format of the documents they use, the details the documents contain, and how they do the different calculations. Remember, the internal calculations will vary from client to client. So to check the accuracy of the calculations, you have to understand how the client does the calculation. Are you following? And for the internal reporting purposes, for managerial and cost accounting purposes, there is no standard external set of guidelines. There is general guidelines, and the internally generated documents vary greatly. So you have to know the documents they're using and how they prepare them. Is that clear? Do you have any questions for me? Okay, so I'm going to stop discussing chapter 13 here, and our plan is, inshallah, we'll continue the discussion of chapter 13 on Tuesday, and on Thursday I will explain to you what we are going to do in the simulation and then take your questions. And then on Saturday, April 3rd, we're going to do the simulation, inshallah. Okay? Do you have any questions for me? Not about the simulation, but anything, the details of the simulation, but if you have any other questions on what we discussed today. Okay? If not, we'll finish here, inshallah. All the course assignments and due dates are coming, so make sure you don't waste any time and you use the time wisely so that in 2-3 weeks you are not distressed. So start preparing for the final exams, start finishing the projects that are due in different courses. Use your time wisely so that you are not distressed at the end. Okay? And if anything I can do for you, please let me know. I will see you inshallah on Tuesday. Assalamu alaikum wa rahmatullahi wa barakatuh.